Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite important historical structure level for this market. This zone, in fact, was acting as previous resistance all across this area. We can see, in fact, how multiple times the market tested its zone and immediately rejected it to the downside. And what we can see is that at the moment we just had a break above the zone. So all this previous resistance that was making the market reject it to the downside every single time that it tested it has now been turned support after the market with this impulse broke above the zone. So we have a situation in which the market is retesting exactly this previous monthly resistance, which we have already identified here, that is now turned support exactly at this zone. Now, when you have a retest of historical previous resistance now turned support and demand, what you would expect is a rejection to the upside away from this area. And in this case, if we look a bit closer by zooming in on the most recent price action, we can also notice how we had a very strong impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly with this previous resistance turn support, which creates confluence of support exactly inside of this area. And when you have a confluence of support zone, that increases the probabilities of getting a potential rejection to the upside away from such area. And also inside of a confluence of support zone, you have increased probabilities of getting more institutional longing, which at that point would further increase the probabilities of a potential rejection higher away from this area. And we will be speaking about institutional longing in just a few minutes when we move to the order flow part of this analysis. Moving down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how we have a market which at the moment is trapped in between these two levels from a weekly perspective. We have the support that is currently exactly at this zone, and we have the resistance, which is here. Now, until the market will remain in between these two levels, so in between this at the top resistance and at the bottom this support, we could simply expect more horizontal price action to be created. So essentially, the market from a weekly standpoint is stuck in this range. However, since we have already noticed how on the monthly this area here is confluence of support, it seems like there is a good probability at some point to get a break above this range. And at that point, that could trigger more continuation to the upside, rejecting the confluence of support that we have previously identified from a monthly standpoint. So here on the weekly, we just have to keep in mind that at the moment we are, in fact, in a range. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, I did speak about gold just a few days ago when the market was in the process of creating this move to the downside and explained all the reasons for which if the market would have created this M pattern, at that point we could expect a rejection to the upside, which is in fact exactly what the market is currently doing. First, it created the M pattern and now it is rejecting to the upside, which is usually what you expect when the market creates a pattern like this. And by the way, you find that previous analysis linked in description, so you can go and check it out for more free education. Now, before we continue further with the analysis from a technical perspective here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing precisely on gold. And what we can see is that with the last reports, net positions have once again started to get increased. We went, in fact, from having 147.7k net positions up to having 161.7k net positions. So essentially, what just happened is that we had an increase of the net positions, meaning that the institutional side of the market has moved back to the bullish side for this market. And in fact, if we look at the details, we can see 9.4k longs added with the last report and 4.5k shorts getting closed. So we see longs getting added and shorts getting closed from an institutional perspective on gold with the last report. Now, this increases the probabilities that we could see more potential bullish continuation, rejecting the confluence of support that we have previously identified on the monthly time frame. So keeping this in mind and moving back to the daily time frame, what do we see? Well, from a daily perspective, there is one very important zone that we must identify, which is this area here. This is the previous daily support that was acting as support all across the zone, which at the moment the market has broken to the downside. And until the market will remain below this level, this will be acting as resistance. So the market can easily test its zone and reject it to the downside. This is very possible. And in fact, if the market rejects to the downside, it would go for a deeper test of that monthly confluence of support. And only at that point, we could expect a potential move higher. However, speaking about the most immediate possibility, is that the market could break back above this resistance. Now, if that will happen, this previous resistance would once again be turned support. So if we get the break at that point on the retest of the previous resistance turned support, since already we are seeing institutional longing, we could see on the retest of the previous resistance turned support more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. So to recap, until the market remains below this zone, it can easily be rejected to the downside. However, if we get a break above on the retest, this is where we have good probabilities of getting more institutional longing. At that point, further increase the probabilities of a potential push higher away from the zone. So if we get this impulse and correction breaking above the zone, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market inside of this area, I wouldn't be surprised to see a potential push higher away from this zone, completing at that point this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.